Hey everybody, hope you're all doing well. Today I'm going to be breaking down VWAPs. I'm going to be covering what a VWAP is, the different types of VWAPs, how I utilize VWAPs, and I'll be going over the VWAP suite that I created for TradingView, kind of streamline your experience when using VWAPs. So some of you guys might already know what VWAPs are, but essentially VWAP stands for volume weighted average price. And it simply just shows the average price of an asset weighted by volume. And if we see here, this is kind of the calculation for VWAPs. It's essentially the cumulative of volume times price divided by the cumulative volume. That gives us the VWAP. And the reason why I love VWAPs and I think that they're super powerful is because VWAPs incorporate volume into them. Unlike moving averages, set a certain length on them, and depending on the time frame you're using, they're just kind of giving you an average of the price. They're very subjective, and I'll cover that a little bit more here. But essentially, when we're looking at price here in this calculation, it's the high plus the low plus the close divided by 3. And many VWAP indicators, you're actually able to change the calculation of the VWAP, but this is the standard. So there's 3 different types of VWAPs. We have an auto-anchored VWAP, and essentially what that is, you set a reset period. So big ones are session VWAP, that's just a day. We have weekly VWAPs, we have monthly VWAPs, quarterly, and then yearly. Essentially, those auto-anchor, and they reset at the end of the reset period that you select. An anchored VWAP, not auto, anchored means that you place it wherever you want on the chart. I've been using these a lot recently, and I think that they're super, super effective. You want to place them on big events, big swing points, big swing lows, swing highs, and kind of just any area of interest where you think that a shift happened in the charts or a shift happened in the asset, and it can give you a line in the sand. So they're super, super effective. And the last type of VWAP is called a rolling VWAP. Essentially what a rolling VWAP is it takes a rolling period window, whether it be a 1-day, 7-day, 30-day, or even a yearly. Each day or week that goes by, essentially it's adding it on the tail end. So there's never a reset. Unlike the auto-anchored VWAPs, which reset, the rolling VWAPs never reset. So if you're looking at a 30-day rolling VWAP, that means that each day that goes by, it loses the last part of the 30-day window and then adds in one more day for that rolling VWAP. And those are super effective as well. I like to use those more in line as a moving average, but they're super effective. And later in the video, I'll cover how I like to use each of them. I think that moving averages are much more subjective than VWAPs, and that's why personally I've been using VWAPs a lot more recently over the past year or two, because unlike moving averages, VWAPs incorporate both price and volume, as I said earlier, and volume is a super useful metric that not many people use. And I think that VWAPs are just very subjective. You could have a 22 EMA, you could have a 44 SMA, you could have a 55 weighted moving average. There's just so many different ones that you could use, and you can always find one to fit your narrative. And that's why I like VWAPs. VWAPs are cool because it doesn't matter what time frame you're on. The VWAPs are going to stay the same. And I think that's a super useful point. So for that simple reason, I think that VWAPs provide a much more accurate representation of true market sentiment and just overall value. Just a few quotes I added up on here. Volume tells the story that the candlestick hides. Volume precedes price. Volume doesn't lie. There's been many people throughout markets over the last 50 years, 100 years that have said that volume is super important because we could have a candle that looks the exact same, but in one instance, it had a tenth of the volume of the other candle. And that kind of is giving you a story. And the VWAP is cool because it's going to represent that. It's going to show you where there's high volume breakouts or low volume breakouts. And I think that's super important. So now let's dive into the VWAP suite. If any of you guys want to add the VWAP suite onto your chart, you could simply just type in VWAP suite, and it should be the multiple VWAP suite right here by TradingView 2. You could add that on your chart completely free. And like I said, it's a super useful tool because I incorporated 3 auto-anchor VWAPs and I incorporated 3 rolling VWAPs in there. So it's a lot easier to manage your scripts because if I want to have 6 VWAPs in my chart, I would have to be managing 6 different indicators. So it just streamlines your experience really well. So let's jump into it. Right here, you could kind of enable and disable the VWAPs that you want to see. And the first 3 are auto-anchored VWAPs. The last 3 are rolling VWAPs. The ones I like to use are a session auto-anchored. That's more for short term, probably like 30-minute and below. I like to use a weekly auto-anchored and then a quarterly. And sometimes I'll change this to a monthly, just depending on what I'm doing for my analysis. And then for the rolling VWAPs, I like to look at a 1-day, a 1 week, and a 1 month. And it really just depends what your goal is with your analysis, whether you're trying to do short-term trading, mid-term trading, if you're trying to do higher time frame analysis. It's cool because I had the ability to just change any of the time frames that you want on here to fit your own analysis. Here you could change the different calculation of the source. Here you could enable or disable the VWAP labels. So these labels I added up on here, they're super cool because as you can see, the percentages actually change. So right now for IOTA, I just have as an example up here. To get back to its session VWAP, it's about 4.3%. So when price is above these, it's going to show -%. It kind of just gives you a representation of how far price is away from those VWAPs. We go back into the settings here. This right here, you're able to add a multiplier. So if we disable these right here and just look at the 1-day rolling VWAP, we go down to the rolling VWAP 1. We could add a 1 standard deviation, and I added a little tooltip here. It just shows you that any value you put in there above 0 is going to give you a standard deviation outside of the VWAP. Standard deviation bands, a lot of people utilize them. Personally, I don't use them too much, but they could be effective. You could just play around with them, and that's why this VWAP suite is cool because it makes it easy to backtest. So if we look here, I put a 1 standard deviation in. We can see it plots a 1 standard deviation band around the main VWAP. And like I said, some people can use them as support and resistance, above them. They're kind of similar to Bollinger Bands. I don't utilize Bollinger Bands, but I know that there's a lot of similarities between them. So if we look here, disable, enable, same thing for the anchored VWAPs. You could add whatever you want, and then just a value of 0 is going to hide the bands. And then the style suite here, you could change the different type of line. Really, it's just a line or a step line. And as you can see with mine, I have step lines on all of my rolling VWAPs, just to give me a clear indication of what the anchored ones are and what the rolling ones are. There's a lot of different ways to utilize these VWAPs, but essentially the way that I like to simply utilize them is not a perfect line in the sand where we're going to get perfect reactions off of them. Sometimes we will see price react perfectly to them, but it's more of just a general area where, depending on the time frame you're using, say we're looking at the monthly rolling VWAP right here, when price is above, it's considered bullish, and it's considered that over the last month, price is trading above the volume weighted price. And it kind of gives you just a good gauge of when to be risk on, risk off if you're trading. There's so many different ways to utilize these, so I would suggest to add the VWAP suite and just play around with them. You could go back testing a lot of different coins, play around with the different lengths of them, and they're super useful. The last type of VWAP is an anchored VWAP. The anchored VWAP is actually a drawing tool. If we go into here and we see anchored VWAP, what this is you actually are able to place this on any point you want on the chart. So if we stay in drawing mode here, show you that we could just place one up there, place one at the low we just had, and we could just continue to go on and just place them wherever we want. Pretty soon here, I'll show you guys some useful times I've seen these, but even right here is a great example on IOTA. If we just place these at major swing highs and lows just over the recent time, we can see that this was a major support area. You see how the bands were getting pretty tight here? Even right here. I see all of the bands were acting as resistance. All the bands were acting as support. We broke out, retested, bam. Same thing here. Right when we started trading back within these bands, it was time to pay attention. And then, of course, right when we lost these, look what's happened since. I think that anchored VWAPs are probably one of the most useful ones because they give you the ability to add them on important points. So if we look here on Bitcoin, over the past few weeks, I've been looking at the election VWAP, and it's been actually a really good indication. So if we place that right when the election happened on November 5th, and we see Bitcoin has given many reactions. Like I said earlier, it's not going to be a perfect reaction. Sometimes we may, but it's more of just a general area. We see this liquidation event right here. We got this liquidation event, basically tapped it perfectly, continued to go higher, had a massive pullback, almost $18,000 pullback. Hit it perfectly, had a reaction, hit it again, had a reaction, hit it again, had a reaction, and here we are hitting it, and we just had another reaction of a wick. What this basically is telling us is since the election, let's see where the volume weighted average price is. This represents positioning. So this gives you a good idea of all the positions that have been put on since the election and kind of where is that over-under line of where the positions are still generally in profit or positions are starting to get more bearish, more concerning. And it's cool because a lot of institutional players like to use VWAPs to kind of average out their entry prices. So VWAP is something that not a lot of crypto traders I see utilize, but they're super useful, and I strongly urge you to play around with these. Go draw anchored VWAPs all over the chart, backtest, add the VWAP Suite. I think you guys will be pretty pleased and pretty interested on how effective they really can be. And just for a more short-term view here, I was looking at the all-time high VWAP, place one here. We had a VWAP right here at the bottom. Just these major swing points represent major turns and open interest as well. And then I think I added one from the liquidation event, and then one from this low, and then one from this high. See how price acted as resistance perfectly? All these VWAPs, these anchored VWAPs, just from major swing points over the last few weeks. Perfect resistance, came back down, hit the election VWAP. And I know that there's a lot of lines on here, but the point isn't that there's going to be all these lines. The point is to look when they converge. So we can see right here they converge pretty well. Bitcoin treated them as support for a little bit, but sliced right through after. But where I found it very interesting was right here. So basically, Bitcoin rejected off this VWAP, came up, kind of did like a double tap on each side, and we see that right when we broke out, we retested that top VWAP where it was resistance, and then bam, Bitcoin shot up. And of course, we've came out already back down, but that's not the point. The point is that price respects them very, very well. Here's a few other examples I had up here. On XRP here, amazing example. I basically placed anchored VWAPs all on the major swing high and swing lows. And as we can see, it's not about having so many lines. It's about seeing where they all converge. We know that that's going to be a strong resistance or support zone. Same thing right here. We can see how we're holding these VWAP bands, slice through, act as resistance, resistance, so on. Right here, you can see big resistance of bands. Right when we broke out, what do? We went straight to the other bands. And if we drop down on a lower time frame here, you can see how price really reacted well to these bands. If we look here, you can see price just was wicking. And once it broke out. And then above here, considering that I had VWAP bands, anchored VWAP bands on all the major swing points over the last month and a half, anytime XRP was above here, this was kind of points where it's like, okay, we're in pretty bullish territory. At any point, if we break major resistances, we could see larger moves to the upside. And then even here on the pullback we just had, see how much XRP rejected and kind of just acted very interesting. Just price action was so interesting, and where it was right in the VWAP bands. And then we just had a fall out of the VWAP bands, and instantly we got right back in this. So they're super interesting just to look where they converge. And I'll just keep emphasizing that. It's not about placing 100 lines on your chart. It's more so looking at where they all get very tight, because that's going to be an important area. And in my eyes, just in a short-term view here, I like to see that XRP popped right back up over here, because if we see acceptance below these VWAP bands and to say we come back down and we're starting to trade like this, in my eyes, that is a short-term warning signal. Doesn't mean we're going to go way lower, but what it means is you better be cautious until we regain those bands. And that's just one of the major ways I use them. And of course, I'm kind of giving examples here for anchored VWAPs, but I use the VWAP suite in a similar way. Of course, there's not going to be 50 lines on there. There's only going to be 6, depending on which ones you enable. But I use them in a same general way. So something like the monthly VWAP. We go over to Bitcoin here. This was actually a great example of a trade that I took right before the election. It was a beautiful trade. This green line right here was the monthly rolling VWAP. When we had this pullback right before the election, we tapped it perfectly. And using a little bit more analysis, I used a volume profile here. I was able to see that we went down to the bottom of our value area. So these dotted lines here was a value area high, value area low. So seeing that we had the election coming up, Trump was favored to win, and the market looked at Trump as a bullish signal, right when we tapped that monthly rolling VWAP, and then we closed that wick back within our 70% value area, for me, that was a great trigger to go long. And sure enough, it was an absolute amazing trade. That's just one example of how I kind of use a rolling VWAP on top of a volume profile or a big support zone, or just adding it in as extra confirmation to your trading strategy or your setups. And since then, we held it very perfectly until we lost it here. And see here, we've been flirting with it, and that just shows indecision. And we could see that Bitcoin now is trading below most of its VWAPs. We could see here the monthly, the weekly anchor, the 1-day rolling, 1 week rolling, quarterly, and even the session. So right now, Bitcoin is technically in a bearish spot. At any point, we could break the support and fall back to lower support zones. So in my eyes, doesn't mean I'm not going to take trades down here, but what it means is we need to see these VWAPs come down and Bitcoin start trading above to be in any short-term bullish stance. And that's really how I use VWAPs. We'll look at one more example here on XLM. I actually have one more example on Bitcoin from the consolidation of last year. It was super useful. But as we can see here, I placed many VWAP bands from the election, just at any major swing point, swing low point, and look exactly where XLM has landed. All where these VWAP bands converge. And like I said, it's not about having hundreds of lines on your chart. It's about looking at where they all converge, because that's going to give you a very important level, a level where you really want to be paying attention. And that's exactly what I'm doing here for XLM. You know, we come down and we use this as support. This is good to see. Of course, the market's heavily looking at Bitcoin here. But if XLM starts trading below here and is accepting below all of these bands, basically all of the major anchored VWAPs since the election, so we're looking at over 2 months now, in my eyes, that's short-term bearish. And this would be an area to really be paying attention. And then vice versa. XLM starts bouncing up and we're trading above all of our VWAP bands. And then we can use like a volume profile or just other analysis on top of it. We could see, okay, we have high volume nodes all throughout here. So if XLM can break above all of its VWAP bands, this right here is kind of the last resistance area. We could see that there's high volume here. And basically our value area high here gives us, okay, if XLM holds these VWAP bands, comes back up and is trading above them, this is an area where we could see some very bullish short-term price action. I would just continue to stress for you guys to just go play around with them. It's the best way to learn. Backtesting is controversial in some ways, but for something like this, backtesting is very vital. If we look here on Bitcoin, I'll show you guys another way that I use these VWAP bands before we broke out of the consolidation. If we place one right here on the ETF pump, place one at the bottom of the ETF dump, one right here of our consolidation, one right here of our first leg breakout, another one of the high of the second breakout, and then we could do an all-time high breakout. And then we could just go through and just place them on major swing highs and lows. So if we see just all the major swing highs and lows in my eyes, that could be relevant. And as we can see, all these bands are starting to converge in a pretty similar place. So basically, once we were looking at this consolidation here and everyone was wondering, is this going to resolve upwards or is this going to resolve downwards? Even just drawing a simple trend line here and seeing Bitcoin came back up here. And at this point, we knew just with the structure, other TA, of course, but just price action in general, this was the decision area. And we could see we were trading all within those major VWAP bands. And essentially, in my eyes, at this point, of course, I was leaning bullish. But if we saw another breakdown, say like this, out of these bands, that would have been a very bearish scenario in my eyes. And that kind of just gives you an area of like, okay, I need to pay attention here. Because whatever breakout we see out of these volume weighted average prices over the last 8 months, probably going to be significant. So sure enough, once we broke out of that top trend line, we were well above these bands. We had enough evidence to show, okay, Bitcoin is resolving upwards out of this range. Sure enough, it worked out perfectly. So yeah, this is basically how I use VWAPs. Wanted to keep it somewhat short and digestible. I think VWAPs really are better than moving averages. Of course, moving averages have their place, and this right here is my moving average explorer. I created this as well. It's very similar to the VWAP Suite, but obviously it's for moving averages. You could just type in the multiple moving average explorer in your indicators. You could also add that one. So I utilize this sometimes, of course, but for general trend following and just overall analysis, I think VWAPs take the lead. And the reason why is just simply because of volume. Moving averages do not incorporate volume, and we only have open, high, low, close data plus volume. That's all price is. That's every single indicator. All of the indicators on TradingView, they're all built upon those 5 things. Open, high, low, close for any time frame, and then the volume. The fact that VWAP incorporates all of that, I don't look at it as a lagging indicator. I look at it as a awesome indicator that is giving you the raw data of what's actually happening. So hope you guys enjoyed that video. And let me know in the comments if you had any more questions about it or if you want to see me kind of expand on any of these topics. Thanks for watching.